Hello, everyone. You're here with Rob and Mike, and today we're going to talk about managing expenses. One of the reasons we want to talk about this is because lots of people focus on sales and sales growth, and we feel that it often gets overlooked that one of the most important things you can do as any type of business owner or even in your personal finances, manage how much money you are spending. This is something that often gets overlooked. I think people just want to grow that top line. They think more money coming in is making more money, and it's like, well, there's some truth to that, but how many cents do you make for every dollar you make, and how does that change based on how many dollars you're making? So we'll talk a little bit about this today. Talk about cost efficiency, and then how do you balance kind of spending for right sizing your company with how you're trying to service your customer, but also like what your growth projections are and or what your growth objectives are. So all right, we'll jump into it. And I know you got lots to say on this. You do a lot with expense management in the real estate business. You have to manage those projects kind of from start to finish on how much money is going to be put into the property before it's turned around. So maybe you want to start with that. You got a recent example.
No, of course. And I think a lot of people have this big picture in their mind, right? We're going to make X amount of dollars, right? But how many dollars do we actually have to spend to make that net figure, right? So I think financial stability and financial security, whether you're flipping a home or running a business, should be priority. And that should outweigh the actual revenue aspect of it too, right? Because what we're trying to do is improve cash flow for that specific property or business itself. So there's a lot of decision making that goes in there. Excuse me. And it really details about sitting down and kind of going over what your goals are and having a big picture perspective on how to manage that. So before we even start any project, we have a good idea about the cost itself, but it's so easy to get carried away, right? And we were talking about a company that generates $100 million, right? But it costs them $160 million to generate that $100 million, right? Does that make sense, right?
Yeah.
So there's no really concrete stability there, and there's some business implications, right? So every decision that you make from even a small perspective to a large business perspective, I think instead of focusing on revenue and sales, I think to really create stability and financial stability, you have to look at expenses first. Because you can go out and spend as much as you like, but how much is that actually going to get you net profit down the road?
Yeah, that's right. I think one of the things I'll say on the focus on sales and sales growth that I've seen as a trend, I think a lot of this comes from the recent innovations in the technology industry. A lot of tech companies, software particularly, they kind of just focus on how many people do we need and how much money do we need to get the viable product to go to market with. You could say the same thing about the life sciences industry, but the life sciences industry, to their credit, they have to go through clinical trials, right? So they have to put up the money to be able to do the applications and do the studies and all of that. So it makes sense that they do it that way. With software, it doesn't necessarily make sense that you need to invest $10 million or $50 million or $100 million up front. You don't know that anyone wants your software. You don't know that you're going to have the best software solution necessarily. So you see a lot of software companies pop up. They get a lot of attraction. Maybe they're solving a new problem or whatever, right? And they get that investment put into them. But there's no pathway to profitability, at the onset of that, because they don't know what profitability is going to look like. A lot of times software companies are figuring out the pricing as they go. They have to figure out their market penetration as they go. And the last thing that they're thinking about is how much money they're spending. They think about things in terms of headcount, that those people require a salary. So you got to pay those people, right? Yeah. So headcount is expense, right? And that's the biggest expense that you'll see at software places. And then until you're making money, you're just paying those people, right? And so a lot of software companies that do fail because they don't have a good roadmap to figure out like how do you actually start getting a return for your investors. And the investors get bored because eventually, like if you don't go to market on time and like there's delays or your product isn't as adopted as you were hoping it would be, another competitor comes out and does it better. There's a whole bunch of things that can go wrong. So if you have like a 5 year plus development timeline, that's 5 years that you're not going to be making money, that you're going to be paying those people, and whatever other infrastructure investments you're going to have on top of that, it might not go anywhere, right? So you kind of want to like have those things like mapped out ahead of time. And it's also good to think about like, well, can we build like a smaller scale profitable version of this that we can then scale, right? And this is something that you and I have like danced around a little bit, but like, start with profitability and then scale profitability. Don't try and just like, this is the dream, the vision that we have, and let's just like get $100 million invested in us so that we can just do this. It's like, well, you might be able to talk people into investing $100 million into you. That doesn't mean that it's necessarily a good investment. They might just have like if someone's worth billions of dollars, them investing $100 million into this, this product idea that sounds good, it's not that big of a detriment for them if it goes south. But at the same time, it doesn't make it a good investment just because you talk them into it. Right?
Yeah. And it comes back to like vision. We all have these big visions, whether it's tech, healthcare, pharmaceuticals, whatever the type of business you're running. We have that big picture. Oh, I'm going to make $100 million. But as you mentioned before, it's kind of you have to outlay that roadmap and say, okay, year 1, 2, 3, and 4, and 5. Okay, what is that going to cost me to get this up and running? Right.
Yeah.
So debt management is very important for like those type of businesses.
Yeah.
Because if you're not managing that correctly, that whole profitability aspect is out the window.
Yeah.
Right. So we have to really improve the debt management to kind of focus on, okay, where are we standing now for funding? How much are we looking to spend? And what does that profitability look like by year 5? And down that road every single year, just avoid unnecessary costs.
Yeah.
Right. We say trimming the fat, we'll say, because especially if you're in early stages, debt does rack up big time. And then there's interest. Right. And a lot of people aren't focused on that. It's like, okay, let's take a step back. Yeah, we have an idea of what we could generate because we're going to be the only supplier in this market. We're going to do this and that. But okay, on the underlying service or product, what is it going to cost you to carry that for that up to 5 years, whether it's salary, whether it's, paying a loan back or whatever the case is. So you have to really focus on that to really determine where those cash flows are going to be by year 5.
Yeah. Yeah. Right. So one of the things that I think about with like cost efficiency too is thinking about your specific business model and like what your actual goals are that you're trying to achieve. So I got a recent example that in my personal experience for this is with netgreen.com. And a lot of my contemporaries, they were operating more like a software company and less like a financial services company, right? So this is the interesting intersection of those two industries for fintech companies like that, right? So we're trying to be an online platform that streamlines the investment process for people. And so it's easy to get caught up in the idea of like, oh, because we're online, that means we're a software company. It's like, not really. I'm not, the technology is there from my perspective. The technology is there to streamline the process and make my job easier so that if I get 100 investors for a specific investment offering, I'm not pushing paper for 100 people. I got an online platform that does the DocuSign and all the transaction flow for those 100 people. So I'm just managing relationships, right? And so that's where the technology like really scales the whole process for me. I won't name specific companies. Some have gone out of business. Some are struggling. This one I will mention, like this is public knowledge, but like Start Engine, for example, they had to lay off like a significant size of their workforce recently. And this is the trouble that they got into is because they hired headcount based on the idea of like being a software company. And so they have these like big teams of people. Like those are real costs that you have to pay, right? So like, you hire like 30 people, your headcount expenses are already at $1 million. That's $1 million a year now that you have to cover just to pay for your people, plus what other infrastructure or any other expenses that you have on top of that,
100%.
right? Now, the infrastructure costs for an online funding portal, I can tell you, are low if you do it right. Which I don't know what every funding portal does. Some maybe just don't keep it as lean as I do, right? But I keep like my monthly operating expense for it is like low, right?
Yeah.
So I can operate the portal for between 1,000 and 1,500 bucks a month. There's some stuff that I might be able to like cut off of that I'm looking into, and I don't have any headcount expense because it's just me and my co-founder right now. And then like when we bring in additional people, we really want it to be either like contract based because we have like immediate work for you to do now, or commission or equity based so that like you're a partner in the profitability with us, right? Because the way the business works is it's a long turnaround time to go from I'm talking to a new potential client to you're listed on the platform to all the time that it takes to actually get your investment offering filled and closed. And so, with that long turnaround time in mind, I can't just be paying a team of people to like, twiddle their thumbs and be idle in the meantime, right? And so you want to be able to get more investment offerings onto the platform, but we're also a new platform, so like it's hard when we're trying to build our reputation, we're trying to build the network, and I'm doing this myself, but even with a team of people, what added benefit do I get? It's like, maybe I get like more volume on like the marketing stuff out there, but there's no other added benefit beyond that. And then I'd have to pay those people, right? Yeah. So I'd be like just burning through cash. That's something that I saw like other funding portals not keeping in mind, and they were coming at it more of like the software approach of like, well, let's just build our business now for where we'd like to be 10 years from now. And it's like, okay, but then you didn't survive the 10 years, so
I know.
Right.
But it sounds like you're doing a great job. Obviously, this is a new established company, right? So this is just taking nothing and creating something out of it.
Yeah.
And it looks like you're already doing a great job of kind of managing those expenses until you start to grow, you bring on one client, and then you start to do more business. Mm-hmm. And then you'll assess and say, okay, we have room to scale. We have extra money now. So this is what my expenses look like. I'm bringing in this cash flow now. What resources can I allocate to bring in more business?
Yeah.
How much is that going to cost me?
Yeah.
And then what is the result of that, right?
Yeah.
And that's going to be a slow process going through the motions. So it sounds like you're doing it right, not going for founders, taking on debt, being significantly leveraged, and then by 3, 4, 5 years, where are you going to be? Are you still going to be paying that monthly payment when not bringing in that money, right?
Yeah.
So you're doing a great job, just kind of doing it where you are right now, managing those expenses, but also looking at that bigger picture without being so leveraged.
Yeah.
And then the next thing you're going to look at and say, okay, now I have these resources. How much is it going to cost me to acquire more business? And what's the result of that? Is it going to be 2, 3 times multiple? Whatever the case might be, you can determine.
Yeah, that's right. Yeah, so one of the things I think about is like where to invest as I'm moving forward with that too, right? So when we close a couple of offerings, we'll have enough cash to fund the operations, and then we'll have a little extra. And so take that little extra and then maybe start doing some of those development checklist items that I have in my mind, right? Like I'd like to add, for example, an investor forum that's not specific to an investment offering, but is just like an open forum on the platform for anyone who has an account with NetGreen. That's something that I'd like to add. You can, and speaking of cost efficiency, one of the cost efficient solutions that I looked into for this would be using Discord as the provider for that, right? So you can actually embed Discord in your website, right? So what I'm going to do is just like embed a Discord, like make an investment forum page or an investor forum page. You embed Discord on that page, And then Discord can be linked to your platform so that you have to have a NetGreen account to be able to participate, right? So you'd have a NetGreen account, you'd have a Discord account, the two of them would be linked. And then you can participate in that forum, right? So that's a relatively like low cost thing to do, but I'm not willing to put any money into it yet because we don't have, I don't have the participants on my website to justify doing it for one. And for two, it's like, even though it's low cost to do it, it doesn't have a ton of value. It's more like it is a value add item, but it doesn't have a ton of value in and of itself, right? And so it's like a nice to have. And it's like, okay, nice to have later when I have the money to pay for it.
Yeah, right. And like you bring up cost efficiency now, and it's so easy to spend money, right? You can get on and spend money like no problem.
Yeah.
And I think it's really important to kind of say like right now, having especially being so early stage, not saying hypothetical, but kind of using your resources and kind of going out to the market to see what some of the payoffs are, right? Because eventually you will be spending more money on advertising or client acquisition, specifics like that. And it'd be good to see kind of ballparking, okay, what areas do I need to focus on that's really going to benefit the company, right?
Yeah.
Is it branding? Do I need to focus more money on branding? Do I need to focus on maybe a business development representative on going to go to market with that? So there's all these different avenues, and it's so easy to spend money and get caught up in all these motions. But it really determines kind of every dollar counts. What's the payoff for your investments going forward?
Yeah. Yeah, I have a life sciences client that I worked with for a couple of years, and early on they had started up as a contract and development manufacturing company. So that basically what that means is like they're not going to make proprietary drugs, but they will basically outsource their manufacturing capacity to other startup companies or other, pharmaceutical companies that want to be able to use their facilities, right? So this is good in the sense that what this does, their mission is like ultimately to democratize life science manufacturing, right? And so what that means is if you have like you're going through your clinical trials, so you're just like a startup like pharmaceutical biopharma company, you're not a major pharmaceutical player, you don't have the capital to go and invest in your own manufacturing facilities. So you're just trying to get through your clinical trials, and then you would really like to just be able to like contract a company to produce your developed drug for you once you can commercialize it, right? So that's what it gives people the ability to do, is like you don't have to have all the extra capital to invest in your own manufacturing facility. You can use ours. And so I like the idea in principle. In practice, they probably don't work with like the newer novel companies as much as they'd like to, because they just like they're a business and they have to operate. So they do partner with like a lot of companies that just already have like an existing pipeline or an existing cohort of drugs that they have out there, right? Yeah. So they have to pay their bills too, and I get that. And the reason I bring this up though is early on in their process, 2020, COVID's hitting. It was a good time for them to be doing what they were doing, because it became very apparent like this is going to be a problem for us in the future if we can't produce this stuff here in America, right? So it was a good mission that they were like getting this footprint put here in the States. But they were a little disorganized in where they were going to be spending their money. And so they were spending money in a lot of different areas. They were trying to do a lot of different partnerships, particularly with like universities and other like research organizations and stuff like that. And those projects are all well and good, but there's going to be a very long return on investment for those, because you're like kicking off these projects that are going to take like 10 years to bear any fruit for you. You're a startup company yourself. And while you're focusing on that, what you're not focused on is filling the capacity for these facilities that you've been buying. So they get hundreds of millions of dollars from investors. And now we're going to pick on the life sciences industry, because the life sciences industry gets a lot of attention. And it's not that it's unwarranted attention, but investors are a little too liberal in throwing their money into that industry because it's a trendy industry. And that's something that I would caution investors on, is like, don't get caught up in the hype, just because an industry is trendy, don't think that like you need to jump at the next opportunity that comes your way in that industry. It's like, no, just assess every investment opportunity. And the most important thing in any investment opportunity is the management. Like, do you trust the people managing the operation? Because if you don't trust the people managing it, then well, you shouldn't be investing in them. Like, what are you thinking?
And that's like Bowen, for example.
Yeah.
They have like what 4 CEOs in the last 2 years,
Right.
Like he says.
Yes, exactly. That's like a nightmare example, right? So they went through a transitionary phase there where they had to get refocused on like, okay, what are we really trying to do here, right? And the answer is, well, you're buying and building facilities, and now you have a capacity that's 4 times what you actually have filled, right? So you've filled about a quarter of your capacity, right? It's like, okay, well, that's not going to fly. Like the operating costs for these are so high. These buildings, like you build a building and it's 150 plus $1 million, right? You buy a building and it's about the same price tag. Like it's so every facility that you pop up is costing you anywhere from 50 to $200 million, whether you bought it or built it.
Yeah.
And then all the infrastructure costs that go into that. Even if a building is idle, you're still going to have people that are there to maintain it, right? To keep it in, operating, capacity. So anyway, you just get to the point where it's like you have to have like, whether it's 50%, 75%, there's a threshold of capacity that you need to keep filled that it's like, okay, that's where we can at least like break even. And then obviously you want to push towards 100% capacity. You want to be like using all the capacity that you have, right? But that becomes a big question, is capacity utilization for a manufacturing company. So you have to think about like where are you spending your money to further that goal, right? Mm-hmm. And so it's good to have the good mission of like we want to push in like the novel direction, and so there should still be some effort allocated to that. But first, you need to make it, right. So you need to make your business so that it can actually become self-sustaining, and you're not always knocking on an investor's door like, hey, we need more money, like, hey, we need more money. Because the investors, like I said, they get bored because it's like, okay, but like I just keep putting money into this thing, you aren't really showing me a pathway to like profitability and starting having some of that money come back in. So why should I keep putting money down? Even in an industry with life sciences, it's not going to work forever.
Yeah, no, I definitely agree. And debt's not cheap nowadays.
Mm-hmm.
Raising capital, whether it's debt, it has a very high cost premium to it. And you really have to focus on that near term instead of focusing on kind of more of like the revenue and sales aspects, because we live in a changing environment, right? You mentioned manufacturing. Now, with all the regulation and potential tariffs that are out there too, from a manufacturing standpoint, they might be able to buy or acquire metal at $1 a foot, right?
Mm-hmm.
And now all of a sudden, with all these tariffs, you can't acquire $1 a foot. Now it's $1.50 a foot, right? So now it's going up like 33%, mm-hmm. and that's just a variable expense that you have to kind of manage. So I think having the financial planning, having the management in place to assess those kind of variable behaviors in the environment, but understanding your business from a profitability and cash flow perspective, mm-hmm. then you could kind of focus on the revenue generating aspect of the business.
Yep. Yeah, that's right. Yeah, and one good there's a good piece of advice that I got for you can use this for your personal budget, and I would say that you should apply this to your business as well. But think about areas where in your personal life, you can think about like, what are things that I enjoy doing? And it could be like hobbies that you have. It could be traveling, those types of things though. And you identify those areas and you're like, okay, these are areas that I'm comfortable spending money. Yeah. So maybe I don't necessarily need to think about like limits I need to put on my spending, but like when I want to spend in these areas, that's okay. And then when I want to spend in these other areas, that's not okay. And then so I don't spend here, but I spend here, right? That's something that you can apply to your business too. Think about it from a roadmap perspective where you're like, let's map out our next 3 to 5 milestones that we're trying to achieve, and then what spending categories go into achieving each milestone. And it's like, okay, so it's okay to spend money in these categories to achieve this milestone. And then when we achieve that one, we're going to be working our way towards milestone 2. So then we can spend in these areas. Then we're going to work towards milestone 3. So we can spend in these areas. Quick example I have for this is, so I'm going through a cafe purchase. So I am taking out an SBA loan, so I can talk to you about expensive debt. Yeah. One of the first things I want to do is the rebranding, right? So they're operating as a cafe. I'm going to be operating as a cafe. So there's not a ton to do as far as like the space itself. So that's good. So I don't have to invest a ton in the kitchen. I don't have to do any major renovations. We should be able to stay open. And it's just going to be like minor rebranding changes. And then once I've gotten to a certain completion level on the rebranding, we'll have like a grand opening, right? So the first thing for me is in the rebranding is I want to go to a digital online menu. So I'm going to be using Toast for that, right? So, all right, I'm willing to, I already got my quote from Toast. I've had my meeting with them. I know what that's going to cost me. It's like, okay, great. Now that can be, that can be integrated into my business model, and I'm comfortable spending in that area because they're alleviating a lot of concerns for me. The next thing is like the sign out front of the store, right? So they replace the sign. I have not gotten a quote from the sign person that I plan to use yet, but I'm going to engage them soon. And but I know that that's important to me. So the price isn't necessarily a deal breaker one way or the other. I just need to know what it's going to be. But I know that I need that sign. So it's like that's a spending area where it's like, okay, I'm going to spend that money. Okay. But what I don't need to worry about is the decor inside of the store, right? So maybe I want to change the decor or do some stuff down the road, but that's not something that I need to do right now. And it's not something that's integral or like, super critical for the brand itself. So it's like, I like the decor in here. It's fine. Like I'm fine with it. So I'm going to keep that as is. Yeah. That's a nice to have later, right?
Yeah. Is that decor, you changing out the decor, going to make you more money? More than likely, probably not.
Right.
It's coffee, pastry, people are in and out.
Yep.
Yeah, some people, the older crowd might want like nice leather couches and stuff, but okay, that might be small percentage of your market.
Yep.
Right? So it's a great, like, thank you, you're doing it right.
Yep.
It's like, okay, do I invest that? Do I not? How much more money is it going to be? Furniture's not going to make any more money.
That's right. Yeah. Yeah. And so one of the other things that we'll be doing is, so once we go through that rebranding phase, then the next phase will kind of be like getting more in line with kind of like our mission statement is premium coffee, good food, comfortable place to hang out, right? We want to do community events down there, so there's quite a bit of space in the store, which is nice. We'll do things like having an amateur comedy night, some live music. I'm planning on doing something like a projector screen. And then the projector screen, the whole idea here is easy to set up, easy to take down. So when we want to have a movie night or a sporting event, we can have the projector screen up. When we're not using it, which will be most of the time, it's taken down and put away. Like I'll keep it here at my house if I don't have room for it there, like whatever, So just thinking about types of things like that in the business model, right? But then I'll be doing things like changing over suppliers. I think it's called Boston Milling Company. So they're going to use local suppliers, and they do organic like flour and baking products, right? So I'll switch to them from the supplier that we're currently using for the baking products front, right? So there might be some added cost there where like maybe it costs a little bit more like per bag of flour, for example, right? So I will have to make a decision. Do I reflect that in the price to keep my margin consistent, or am I okay with like a couple of cents coming out of the gross profit margin for that for the baked goods, right? So that's a decision I'll have to make, but it's something that I'm anticipating, right? But it's not a huge impact on my business model one way or the other, right? So I'm okay to do those types of things like the supplier changes. There's not going to be any big investment or surprise in the costs or anything coming my way. It's still just going to be boil boil down to per unit economics. So I'm excited about that, and then that will be like really the next phase. So like the reason I bring this up is these are things that I can do to get a lot of value out of to make the transition for this place to be more in line with like what we're trying to do. But I'm not investing a ton of money in this, like a lot of this is just like me putting my own sweat into it. Right.
Yeah.
And so those are things that I think people need to be aware of is what, don't just sign a check for you to not deal with a problem.
Mm-hmm.
That's another thing that I think that's
Yeah.
probably what I'm trying to say here is like, be willing to do stuff yourself or delegate it to someone that you trust to just get it done. And if it's a little bit more work for you or your team, sometimes that's worth it. Like, just be willing to do that. Like, if it's a little extra time for you to put in, go get it done. Roll up your sleeves and just get it done because it saves you on the bottom line.
Yeah. And one thing that you mentioned too that I don't think comes up as often as it should is vendor renegotiation. As you mentioned in your supply chain, prices are always fluctuating, right? And I think in today's market, they're fluctuating more than we've seen in the past. And a lot of these people that are signed up for these contracts, or it might be monthly, is to kind of really explore those options, just because we're seeing huge price increases across the board, from a manufacturing perspective and a supply chain perspective, and really sitting down with your vendors to renegotiate those contracts, to kind of focus back on that profitability. And if it's an expense that you're not willing, or if it's taking up too much of your market share, then go ahead and explore other options for similar products.
Yep.
And I don't think a lot of businesses, and whether it's personal LLPs or whatever the case might be, they're not exploring that option because they're like, oh, I'm kind of used to this. This is working for me, even though my prices are going up. Let's just leave it be.
Yeah.
But really, is that really the best thing that you could do for the business perspective? So there's different ways to kind of have those conversations and really explore what's best for you or the business.
Yeah, that's right. Yeah, you want to use the bargaining power you have to get a better deal as much as you can, whenever you can. That's an area where it's not worth getting lazy. Like, similar to like there's certain areas where you should spend money, there's certain areas where you should spend your effort, right? And things that are in line with like your mission and your milestones and what you're really trying to achieve, that's where you want to be putting your effort, right? You want to put the most of your effort where it's going to have the most impact. And then those other areas you can like, okay, I'm not going to put as much effort here because I know that the ROI on my effort is lower.
Right. Spot on.
Right. Yeah. All right. So going from here, let's just talk about maybe balancing efficiency with growth. And we've been talking a little bit about spending in the right areas. But one of the things I'll say on the growth aspect is maybe there are times when, or especially early on, where obviously you're going to operate in the red because you're not making any money. So how much in the red can you go? You have to think about your cash burn. This is something that comes up even when you're talking to investors. So if you're looking for more money, well, investors want to know how much money you're burning now and how much of like what the use of their funds is going to be. So thinking about the use of funds is important where, all right, I want to raise $50 million, but can you show me a pie chart that tells me like how that $50 million is going to be spent? And so thinking about your growth objectives, how much are you trying to grow in the next year, the next 3 years, the next 5 years? Where do you get based on the $50 million now? Does the $50 million cover you for the 5 years, or does it only cover you for the first 2? And then what's your plan to cover yourself from years 3 through 5, right? And so that's another thing that I think people need to spend a little more time on the upfront. Like if you're starting a new business, and even if you're not just starting a new business, but maybe you're doing something with your existing business where you're going to be expanding or like adding a new segment or you're developing a new product, whatever. You have to think about it. Same
Mm-hmm.
way, right? Like, what's your cash burn going to be to develop that new product, and what money do you have available now? What money are you anticipating making available? What are your fail cases looking like? If you're like, well, we spent way too much,
Yeah.
what does it look like? And then maybe like you have to have an honest conversation of what's the threshold where I decide like we have to cut our losses and stop this now.
Yeah.
I think that having that contingency in place is very important, and it's hard. I have to do this with net green, and it's tough. It's tough to think about like, well, all right, if this and this go wrong, then I have to shut it down. And it's like, well, I don't want to shut it down. It's like, well, yeah, right. Of course you don't, because you just started this thing, and like, who wants to do that? But if you're not managing your expenses efficiently enough, or your sales aren't picking up to cover them, you're not hitting your milestones, like whatever, things are going wrong, you have to be willing to just cut your losses at some point and get out.
Yeah.
So, what is that threshold, right? Maybe you have a little bit to add to that on your real estate experience. Like, how do you decide what the budget for like renovation should be? Um, how do you decide uh, whether or not it's worth doing the renovation in the beginning, right? And then is there a point where you say like, okay, well, I think we just need to cut it here and sell as is? Like, I don't know if you have anything like that maybe to add.
Yeah, no, and I always kind of keep like a 10% kind of cushion, right? And I think every like entrepreneur or like great founder understands what their pain tolerance is going into these things. But more importantly, I think they have a really good understanding of what the costs are going to be and kind of those steps. Because every great founder, they will battle through and kind of achieve that and kind of manage those expenses appropriately. It's when you kind of jump in and one, you don't have the capacity, two, you don't have the knowledge of where this thing's going to go. So I always keep a 10% cushion for loss on all my spending. But we're always focusing around that 2.5, 3 times multiple. So every dollar that I put in, I'm aiming for at least 2.5, 3 times my return. That's kind of the systems I've used, but it's also the knowledge that I put in, kind of knowing where things are going, what things are selling for, what things are costing, and just understanding the overall market and competitiveness of the market. But I think it kind of it goes back to kind of what your pain tolerance is
Mm-hmm.
right out the get go.
Mm-hmm.
And if you don't have a solid business plan or might not have the capacity, it's going to take you a lot longer to get it up and running than someone else that has the funding, that has the additional tolerance, that they could actually kind of take a beating at first, put the money in to develop what they need, and be able to sit back and kind of wait for things to happen. Um, when you're starting out as a first-time entrepreneur or business owner or founder, it's going to be all gears going at all times, right? So it's thinking of ways of trying to be lean, managing those expenses, and kind of what that pain tolerance is on taking on that debt and that capacity to kind of survive through those like tough times.
Mm-hmm.
And I always have a cushion about maybe like 22% that goes into like a reserve fund that could fund me for like my debt, my upcoming projects, specifics like that. So I'm pretty smart with kind of understanding where I am today and what's going to happen over the next 6 months to have those reserves to manage those expenses plus any kind of out of pockets that I might
Mm-hmm.
think about.
Yeah. Yeah. It's the out of pocket expenses that get you.
Yeah.
Yeah, I've had a few of those with the cafe startup, but it's okay. I am the general partner, so the way we did this structure for the company was we have a holding company that's a limited partnership, and I'm the general partner for that, and I have some like friends and family that invested in this with me. I'm putting myself through the ringer to go through the whole process very similarly to what people have to do if they're going to list an offering on NetGreen,
Mm-hmm.
where you're going to have to set up your company and get everything established, get your business model in place and all of that, and then you're going to have to like attract investors and everything. So I'm kind of like going through it like start to finish myself with the cafe thing.
Yeah.
But yeah, the out of pocket expenses, they'll get you.
And it's all about time too. It's like I'm always thinking about ways of how to achieve the goals that I'm trying to achieve
Mm-hmm.
for as little cost as possible.
Yeah.
Is that hiring a few administrative assistants from Thailand? Is that is that a lot more just like phone calls to direct investors?
Yeah.
Is that more LinkedIn connections online to kind of put my presence out there and make introductions to these people? So what efforts can I make now to maximize my value, but at the cheapest cost that I could do it? Because I could go out and spend $1 million on leads. I could buy this whole neighborhood up with just leads who are searching. Mm-hmm. But is that going to really pay off in that type of market?
Right.
So it's really understanding kind of how you're operating, what your results want to be. And then as of right now, we're just trying to be as lean as possible without putting extra dollars in, but getting the same result, but with more effort.
Yeah, that's right. And that's something that I think gets lost as time goes on often, and something that you see with companies that scale too quickly is the thriftiness aspect. Mm-hmm. So when you're a founder and you're just starting out, it's easy because it's a necessity to be thrifty and look for those cheap solutions where it's like, okay, I'm going to save as much money as I can because I got to be lean. I'm bootstrapping this. You have to keep that mentality as time goes on, mm-hmm. and not just say, well, because we have the money, we'll spend the money. It's like, well, you still have to consider how many cents do you take home for every dollar earned, right? 100%. So you get $1 of sales. What's your operating profit margin on that $1 of sales? Is it 10%, 15%, 20%? If you have investors, they want that number to be higher and higher and higher. Mm-hmm. But you have other things to consider, So one of the things I don't like is when I see companies treat their people like, they treat them like dirt. And it's like, okay, but those are your employees. So like you've decided to hire those people. So maybe you should run a leaner operation so that you can treat the people you have better. Mm-hmm. And then by treating them better, you'll get more work product, like more work efficiency out of them, right? But focusing on it from that aspect rather than like you're just hiring more and more cogs, you're signing checks for whatever the best solution is, regardless of price. You don't even shop around because you don't even care. Like for all you know, the next competitor would have given you half the price, but you didn't ask because you didn't care, right? Yeah. So you just see like a lot of like mismanagement decisions getting made at that point where people stop worrying about it because they have the budget to do it. And where this is especially detrimental is like in that the example I was giving earlier is like about the life sciences company. It's easy to just start spending money because you have it and not even be concerned with, is this spending in the right areas or not? And it turns out, like in that case, well, it wasn't spending in the right areas, and they had to re-strategize where they were going to be spending their money to, again, refocus on what were we setting out to do? Oh, build a network of manufacturing facilities. So let's build a network of manufacturing facilities and stop letting ourselves get distracted on the R&D side of things, mm-hmm. right?
And that makes sense. When cash flows improve over time, you might be able to sit back down and go through a whole kind of, we'll say, like I like to call it like a personal financial plan, but it's more of like a business plan, right? So we're making more money. Can we have the affordability aspect and still remain that profitability percentage, whatever that might be, to reallocate more money somewhere else, mm-hmm. right? So, and I think that comes with time. And obviously comes with those cash flows being improving. But I think what's important in this discussion now is kind of creating a roadmap, kind of understanding the big financial picture of financial security, because it's so easy to kind of be in a situation where you're spending money trying to get the platform up or the manufacturing plan, whatever the aspect might be, to really understand where we are now, to kind of deal with that pain pressure, on taking on that debt and kind of structuring it however you want to work it to manage those expenses so you can actually achieve profitability.
Mm-hmm. Yeah, that's right. And so a final point we can make on this is tying this back in with our initial conversation on customer value. So during this whole process, the one thing you do not want to do by managing your expenses is sacrifice customer value. So another consideration for putting your money in the right areas, and tying this also in with my employee example. So you are beholden to your employees to offer them a safe place to work, but also a great place to work, I would say. Like, make it so that your employees actually want to show up to your building. Like, put yourself in the shoes. Like, no one just walks into an office as CEO on day one, right? So you had to come from somewhere. So rather than trying to put on your employees and your people the idea of like, well, you got to climb the ladder just like I did. It's like, how about you have a little sympathy for how shitty it was the first few rungs on that ladder, and think about what can you do to make it so that your people actually want to come to work every day for you. And then likewise with your customers, you're beholden to them to make sure that they're actually satisfied with the product or service that they're buying from you. So don't make cuts in areas that is going to diminish that value that they're getting. Like, don't make a bunch of like quality control cuts if you know that like doing so will create quality control issues. Where like now we were trying to aim for Six Sigma, right? So that like almost perfect, almost every product is perfect. But then you're like, okay, but this is really expensive, so like let's just make some cuts. And then it's like, okay, but now you're like maybe you're now going to go to 95%. So 5% of your products now are going to be defective or like have to be returned, and then that's going to have other costs associated with it, right? Not just costs as far as like having to do the replacements and everything, but also costs in your brand reputation, because now your sales are going to start ticking down because people are going to realize like, oh, something's up here. They don't have the same quality they used to. How often do we hear from our parents like, oh, they just don't make it like they used to, right? Like, brand 30 years later, it's like, yeah, go figure. They just got cheap like everyone else, and then just stop making the great shit that made them great in the first place, right? That's something that like needs to be considered by companies, where it's like you want to spend money in the right areas. One of those areas is your brand reputation with your customers.
No, couldn't agree more.
Yeah. All right. Well, I guess that's enough said on the subject. Unless you got any closing thoughts.
Let us know what you think. Drop a note on what you feel is important in expense management, and we'll reach out and have a conversation with you. Thanks for tuning in.
We'll see you for the next one.